Hello, my name is Eddie Tofpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn and Kansas City wheat. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Chicago wheat. The dominant pattern here had been the dark blue mid-February to mid-June bearish shift pitchfork. The dark blue upper time, which is currently at 544 even, had been previously tested, breached even, and the latest breach was on Wednesday this week and has continued till today. The recent base of action from whence the move up originated had primarily been the combined 38.2% absolute Fibonacci line and also the August 24 low, both at 521 even. This wasn't the low of the move, that was the bright green lower trend line currently at 512.5, but the core support was the combined August 24 low and the 38.2% absolute Fibonacci line. What was interesting about the whole move since mid-December last year was how prices formed a reverse head and shoulders bottom, or triple bottom, which anyway, the reverse head and shoulders bottom is a derivation of. On the same Wednesday that prices broke higher over the dark blue upper trend line, dark blue upper tine, was when the market also broke up over the bright red neckline, currently at 544 even, of the reverse head and shoulders pattern. This move up has now given me an opportunity to lay out some targets above for this pattern. Thus, primary target X would be up in the 560 area, with a secondary harder to reach target X1 up in the 567 area. So what have we left in the way that could alter this idea? Well, there was something that came to light by my looking at the longer term charts for my annual review earlier in January. It is the March to October 2025 to date bright green descending triangle pattern, which you can see on my daily chart highlighted, obviously in bright green, and is currently at 512.25 to 555 even. We're not too far away from the bright green upper trend line today. We're also quite a way along this bright green descending triangle, enough that we are very likely to have false breaks from it, so please be aware. I'm not ready just yet to lay out targets, as we have not broken this pattern as yet, or even to lay out potentials, but we are quite advanced along this pattern. And, as I said 2 weeks ago, and I quote, I suspect the main rival, the dark blue bearish shift pitchfork, this may rival the dark blue bearish shift pitchfork for primacy in determining the future of the market. End of quote. My final point is again something I saw from my longer term monthly charts earlier in January. It is a May/July 2023 to date bear channel. The lower bear channel line is below my daily chart, but you can see part of it in the lower left hand side of my daily chart. Now the upper bear channel line is close to the top of my daily chart. It's currently at 626.25. This is one to just keep in mind for now. Chicago corn. Above the market, as I've said repeatedly, sits the 50% Fibonacci line for 2025 at 454.75, which, as I've said, and I quote, looks a seemingly formidable resistance, because just above that is the very shallowy bearish bright red lower trend line, currently 455.5, to the July 23 to January 24 descending triangle. End of quote. These two managed to cap prices back in November last year and again in between Christmas and New Year. So, as I said earlier, formidable. This was again shown 2 weeks ago with prices trying up to those two resistances on the Monday of that week, but then falling like a stone with a combined key reversal down and bearish long black Mariposa. In the fall, prices broke down through and stayed below the short medium moving average, currently 444 even. The November 2020 high at 439.5. which in truth I'd previously said doesn't look like much support right now. Then the gently rising mauve medium moving average, currently 441.5, as well as the slowly declining gold long moving average, currently 433 3/4. The fall only stopped at what I had called 6 weeks ago, and I quote, the important 50% absolute Fibonacci line at 425, which in turn led to the October low at 425.5. Any such possible moves lower would be the ones to watch, as it may well determine the future health of this market, as prices seem right now to be willing to just hold and maybe test the resolve of the overhead seemingly formidable resistances. End of quote. This move down gave us a weekly key reversal down in the middle of January, with, as I said and I quote, with all the implications such a move may have, end of quote. However, prices have chosen a different way, at least for now, by making a small bull channel over most of January. This doesn't mean it is the end of the potential move lower, not yet. You see, we could look at the whole of the mid-January to date action as a possible bear flag. And having the mauve medium moving average capping prices as it has done this week, and possibly retesting the gold long moving average support, well, that would tie in with such an idea. If such an idea were to come true, then we would be looking at a move down in between the December 2020 low at 414.5 and the February 24 low at 408 3/4. It all depends if we can start to head lower, and soon, allowing me to draw a bearish pitchfork to show the direction lower, but I think it must be soon. Kansas City wheat. We did have until Christmas week last year a major issue on this daily chart. The now thoroughly broken upper time, currently at 499.5, of the March to June bearish shift pitchfork had been broken, but the market still refused to let go of it for quite some time, something I said at the time, and that is not unusual to see in such situations. The market utilized as a base, admittedly a bearish base, but a base nevertheless, and slid slowly along the top of it until Christmas week, when, overcoming and I suppose maybe even assisting, the mauve medium moving average, currently 429.5, and the green short medium moving average, currently at 434 even, saw prices punch higher, through the gold long moving average, currently 533.5, and since then start to stabilize over, especially the mauve medium moving average, which took over as a base for this attempt higher. The rise was capped for a while by erosion from the March 24 low at 551 even, and more so by the dark blue extension, currently 554, but it has continued to rise, sort of, and in the process has formed a reasonable looking December 25 to date bright red bull channel. It's currently 533.5 to 564.25. The market hasn't as yet broken over the dark blue lower trend line, but it is trying. It is also tackling the next overhead resistance, which is the March 21 low at 559.5. However, should we go beyond that, it has only the constraint of the bright red upper bull channel line to stop it rising within a fairly clear area, all the way to the July 21 low at 578. It'll be interesting to see, one, if it does, and two, how it does it. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.